It is time now for our Futures in Focus segment. Oil is climbing for a third day as gold's recent rally continues to sputter. Joining us from the CME to discuss is Ira Epstein, Senior Market Analyst at the Ira Epstein division of Linn and Associates. Ira, we are approaching 12.40 an ounce on gold, but does it have any more upside momentum given what we heard from central banks this past week?
Limited, Vonnie, just for the reason that you're hearing. They're admitting from the U.S., Bank of Japan, European Central Bank, that inflation remains a problem. We're not seeing wage growth in terms of money, and that is the real problem that we're all having. We have full employment in America for all purposes. So gold needs another story, and that story will probably come about once they can actually raise interest rates because of inflation, not in front of it, but because of inflation. So there's a balancing act there for gold. The question is, at what price is gold too cheap? The other question is, what would make gold go up without that wage inflation? And I don't see anything to really make it go anywhere. So more of a trading affair in gold right now, maybe caught between the 1,200 and 1,300 level for the duration of the summer.
It used to be a little bit of a safe haven. It appears it's not even that anymore. What's the substitute for gold as a safe haven these days?
Stock market? How's that? It sounds crazy, but it's true. I mean, every time we get a good break in the stock market, it goes up. The gold doesn't respond to North Korea. The gold doesn't respond to the political turmoil we're getting in America. Therefore, the safe haven analysis just isn't there right now because we're not looking at a stock market that's rolling over. Therefore, no, I don't think it's the safe haven just yet.
Ira, the oil market isn't exactly acting completely in a solid manner either. We're seeing oil rise per barrel, even as the likes of Ecuador says it's going to come back into the market, and we're not seeing U.S. producers cut back either.
Well, here's what's going on there. Why would you want to be short going into the July 24th meeting of OPEC? You don't. You also are hearing already talk, and I put that in quotes, talk, that the Saudis might consider unilaterally cutting another 1 million barrels a day. Let's face it, they have Aramco coming up, their IPO. They need a stable market. I don't think they on their own can do anything. And there's a lot of nonsense talk as I talk to traders about the Permian Basin and productivity of wells falling. The simple fact is that those rigs that are out there, they're not going to increase dramatically at this point, but each rig is now drilling a lot of wells that they're not using. So just like we had before when oil got down into the 20s and we had all these capped wells, if you will, that weren't in production, they're drilling and getting ready. I think oil has a very limited upside. Maybe you can get into the mid to high 50s in WTI towards $60 a barrel in Brent over time. Not in the immediate future. I just don't see that. But yet, I have a bullish bias because why would I be bearish going into this OPEC meeting? They're not going to say something bearish coming out of it.